Good afternoon. Thanks for joining us here on Kalkine TV. I'm Holly Shields, and this is our last show of the day, the last trade. Today, the S&P ASX 200 closed up, gaining 7.2 points, or 0.10%. The top-performing stocks in this index were Life 360, up a whopping 21.79%, and Paladin Energy up 13.14%. Over the last 5 days, the index has lost 3.10% and 2.4% over the last 52 weeks. And then looking at the announcements of some of the top-listed companies, this morning, management consulting service provider APM Human Services International released its financial results for the first half of financial year 22. Following the update, APM's share price surged by over 8.5% to 2.89 at noon. According to the report, revenue shot up 29% to $613.7 million during the period compared to the first half of the financial year 21. APM has reaffirmed its intention to pay a dividend with respect to the second half. The directors are expected to issue a final dividend for financial year 22 of between 40 and 60% of pro forma and PATA generated in the period between the 1st to the 30th of June this year. For its 2022 outlook, the company remains hopeful that its contract wins and recent acquisitions in the last year will provide the foundation for sustainable growth. And then moving on to the next, the shares of the ASX listed allogenic cellular medicines provider Mesoblast are grabbing the spotlight today. Investors are keeping the stock on their watch list after the company reported a significant reduction in its research and development spending in its latest quarterly report. And meanwhile, Mesoblast shares traded 2.3% higher at 1.095 during the early trading hours. Although the stock has dropped 24% on its year-to-date this year and 54% in the last 12 months. The reduction was due to a reduced expenditure in the clinical trial activities during the second quarter. And revenues for the period stood at $2.4 million and increased 7% on the previous. Mesoblast continues to be in a well-established process with the FDA's Center for Biologics Evaluation and Research. And then lastly today, an operational error led to the ASX-listed online retailer Kogan having a trading halt on the bourse. Kogan.com shares were trading 13.8% lower at $4.84 today, hitting a fresh 52-week low. The company's stock has been falling over the last 1 year and is down 65% this period. Although despite this, today's fall in Kogan shares is not a coincidence with the company's announcement of its results for the first half of financial year 2022. Kogan's portfolio of retail and service businesses reported a growth of 9% year-on-year in its gross sales at $698 million for the first half of financial year 22. Meanwhile, its active customer base increased as well to almost 4 million in the 12 months to December of 2021, rising by more than 10% year-over-year to 3.31 million. Kogan.com expects continued growth in the first subscriptions, with a goal of 1 million subscribers by the financial year 2026. Well, that is a wrap for today, but I hope you found the market closing commentary informative. Tune in next time only on Kalkine TV. This is Holly Shields signing off for the day.